Stocks in Japan keep climbing. Yuko Fukushima is here to tell us what's going on. So I'm hearing that this country is getting a lot of attention from overseas investors. Tell us what's been happening in the stock market.
Sure. So let's start with price action today. It's surging. The key index in the Tokyo Stock Exchange continued its advance for the 8th consecutive day. It gained 0.9% to end above the 31,000 mark. The morning session was flat as some investors sold to take profits, but afternoon saw buyers piling back into Japanese stocks. But some analysts warned the debt ceiling talks between U.S. President Biden and House Republican leader Kevin McCarthy later today could dampen sentiment going forward. And just last Friday, the Nikkei ended at a high not seen in more than 30 years. And when you zoom back, you can see that the stock price has been rising since the beginning of this year. Now, it started climbing from around 25,700 as Japan's economy finally reopened after the pandemic. This came as worries about U.S. rate hikes began to ease. The new Bank of Japan Governor Ueda Kazuo offered more relief to investors when he indicated the bank would continue monetary easing. By March, the Nikkei was sitting at around 28,000. Share prices dropped when bank runs in the U.S. spooked global markets, but soon after, the Nikkei started heading up again. Foreign investors had noticed Japan's economy was outperforming others, and robust earnings by Japanese companies helped build momentum. In May, the Nikkei passed the 30,000 mark, and with the Japanese yen weakening against the dollar, Tokyo was now a hot market for investors across the globe.
So you listed quite a few reasons for the rising market, but what is the, attracting foreign investors the most?
Yeah, so I talked to an equity strategist at Goldman Sachs in Tokyo. Now, Tatebe Kazunori says that one major reason was the call to reform corporate governance by the Tokyo Stock Exchange. Now, this happened in March. The TSE demanded that underperforming companies improve their capital efficiency. In other words, do something more constructive with their spare cash. You mentioned expectations for structural reform, and one is that call from the Tokyo Stock Exchange to firms to increase their capital efficiency. So how is this impacting how companies perform here in Japan?
Companies are announcing large share buybacks, dividend increases, unwinding of cross-shareholding, and restructuring of unprofitable business. So all the things are very important for better governance and also better profitability, and stocks market are welcoming these actions.
So you heard Tadebe mention share buybacks there. Well, we are hearing that a lot in the news too. And when companies buy their own stocks, it reduces the number of stocks in the stock market. So that pushes up the stock price, and obviously that's good for stockholders.
I see. So Japanese companies are finally getting their act together to make their stocks more attractive. But tell us more about these foreign investors. Who are they exactly?
Yes, well, foreign
We
investors...
think the main risk are from overseas.
Yes, well, sorry about that. Well, foreign investors make up about 70% of people trading stocks on the Tokyo Stock Exchange, and Tatebe says right now most of the buyers are short-term buyers. That's why he says one reason there could be a market correction is that the prices are now testing their upper limit based on their historical movements.
We think the main risk are from overseas factors such as U.S. debt limit, recession, and geopolitical risk. As I said earlier, short-term investors led the initial part of the rally, and their position looks stretched, so share price could fall sharply if overseas risk-off event were to trigger unwinding of their positions.
What are the possibilities of these risk events happening in the United States and impacting Japanese stocks?
Regarding the U.S. recession, I think the consensus is recession is not avoidable. However, our economists believe that U.S. could achieve soft landing, and they see 35% of recession risk, meaning that 65% we can avoid recession. So basically, as a house, we maintain a constructive view on global economy and therefore Japanese stock market as well.
So this stock rally could be short-lived, depending on what happens overseas.
Yes, but on the plus side, Tadebe says more mid to long-term investors are starting to dip their toes in this market thanks to a bull run. And he says this is a good chance there is a good chance that these newcomers will continue to invest if Japanese companies continue their structural reform demanded by the Tokyo Stock Exchange. So let's see if that reform really happens.
Thanks, Yuko, for your analysis.